All right, good morning. Let's go over today's trade plan. So in Friday's recap, I mentioned that the 29.5 to 32 was key support, and that's really the key area that buyers had to hold in order to remain in control. Overnight low ended up being 29.25, so responsive buyers entered right at that key support and pushed price back up towards the 1840 and some of those higher prices. At this point, the S&P has been primed for an upside move for a few days now, but with Friday being option expiration, low volume session, we didn't really get that movement, and Friday ended up being a neutral day. So at this point, there is some indecision in the market, but we are still seeing more aggressive buying in the market rather than selling, and for that reason, we're still going to give more preference to the buy side. Now, ideally, ES holds above the 34 quarter to 36 quarter pre-market support. If the upside scenario is really going to play out and we're going to get a break above the 1842 to 1844 area, with 46.5 being the all-time high, so if we're really going to get that strong upside directional move, then ideally you don't want to see ES dipping below 34 quarter. We have the gap fill right there. It's pre-market support, and at this point, ideally, buyers hold ES above that pre-market support zone. If we break below it, it doesn't necessarily mean that sellers are now in control, but it tells you that the market is not quite as strong as we expected, and perhaps the scenario of ES pushing to another all-time high is not quite in play. So it would be a red flag if we broke below pre-market support. Below that, we still have that 29.5 to 31.5 as a support zone. We're also going to use that as the bull bear zone on the day. And if we break below 29.5 to 31.5, then there's potential that S&P could go directional to the downside, and we could see some long liquidation down all the way to potentially even 11.5 to 14.5. But at the minimum, probably towards 21 quarter to 23 quarter support, and maybe 17.5, 1975, something like that. We'll have to watch the relative volume on the day time frame to get an idea of how wide the range can be. And if we start running on high volume and you break 29.5, then even 11.5 to 14.5 would not be out of the question, because at that point everyone who was expecting a push to new all-time highs would be getting stopped out of their position, right? Or they'd be exiting their position assuming that the upside scenario is not going to play out. So, the first order of business is still going to be focused on the long side. And, everything is still set up for an upside move. So we're still going to give more preference to the upside. The only time we're going to flip our bias is if we start seeing the S&P break these support zones, right? 34 quarter, 29.5 to 31.5. Then we can flip our bias. Or if, right off the open you get an open drive to the downside and you break 34 quarter, then, even that would be a good enough sign, and it could lead to some liquidation. So, the first preference and our initial bias is still going to be to the upside, especially if ES holds 34 quarter, 36 quarter. But if those zones start to break, then we have to be flexible enough to realize that now everyone who expected a breakout is going to exit their position, and that can result in a strong move in the other direction as well, right? So whenever the S&P is kind of in a balanced state where you've been spending a lot of time in a very well-defined range, at that point, you're either going to get a directional move to the upside or to the downside, right? Now, so far, we're still preferring a move to the upside, but if it doesn't happen, just understand that the dynamics behind it and why it could result in a directional move lower. And of course, we have to keep an eye on relative volume to kind of make sure that wider range scenario can play out, because typically you're not going to get a wide range when you're running on light volume. But the overnight volume has been pretty well running above average for part of the overnight session, and even now we're seeing some pretty decent volume in the market. So if that continues, then we can get a directional move. And On the upside, if we take out 42 and 1844, then you're probably going to get a push to new all-time highs. I'm not expecting the market to break 44 and then fail and turn back around. I think if you take out Friday's high, then it's pretty likely that you're going to push through the 46 half and then go up and tag, the 52 half to 54 half and potentially even higher. There isn't any hard resistance above 46 half, right? So the market doesn't necessarily have to stop at any of these resistance zones on the way up. Now it can pause just because you might be extending the range a bit, and perhaps the market has moved a little bit too much now in the short term, gets a bit overbought. You balance out a bit and then you continue higher. But break above 46 half would be a upside balance breakout, and you certainly don't want to fade that kind of price action. So above 34 quarter, 36 quarter, and especially if we take out 42 to 44, we're not looking for any short setups. Ideally, we want to be trading in the direction of the short-term control. And bigger picture, we've been bullish as well. Now we're balancing at the highs. So, so far everything is supporting the upside scenario. So that's the one that we're going to pay more attention to off the open. So really just, keep an eye on pre-market support. That's a very key area at this point. And ideally, if we're going to get that big upside move, then we're going to hold above this zone. And taking out 42 to 44 would just confirm that idea that initiative buyers are active in the market, and it'll bring some of the upper resistance zones into play, a push to new all-time highs. And again, you can get some profit taking at the zones, but we're not looking to short any of those areas. So that's really the main idea on the day time frame. Let's see how well ES holds up at pre-market support, and we'll take it from there.